Hey TMFG community, Carlo Cansino here with Iaconetti, and in today's Ask TMFG episode, we'll be discussing what you can do during times of market volatility. As a reminder, if you do like our YouTube channel, please do subscribe, give us some feedback in the comment section, or just give us a like. In today's episode, we'll be discussing what you can be doing when the market is volatile. And that's something that affects people in many different ways.
Yep.
Some people are calm, cool, and collected when it comes to market volatility, and some need to be reassured. And those are the clients that maybe go online to read more about what's going on, or maybe call their advisor. Those are things that we see people do.
Yep.
It's a wide range when the market's volatile.
Yeah, and when we are in these times, we like to kind of divide between two different sections. There's things that are within our control, and there's things that are very well without our control. And that is something that we went through last year, right? All the things that were outside of our control did not work in our favor. Interest rates were high, inflation was high, markets were poor, the economy was on a downward trend. There's talks of recession going on.
A war broke out.
Thank you. It feels like forever ago now. But yes, a war had broken out. Pretty much everything that went against us did.
Yes.
And instead of kind of preoccupying yourself and thinking about the things you cannot control, our main focus is kind of shifting back to, okay, what is well within our control that we can work on that should be able to help the situation, that no matter what goes on outside of us, we'll still be okay because we have the things that we can control. And I think the first one there is portfolio. Portfolio is an easy one to kind of go through. And a big factor that we prioritize is diversification. So why don't you talk a little bit about diversification, how that helps us in controlling what we can control?
We often talk about mitigating or putting risk onto many different companies. So that's what we do in the portfolio. We try to minimize the amount of risk that clients take when they invest by spreading out the money to many different companies. And for our clients, there are more than 12,000 different companies in your portfolio. Now, a lot of comments I get, or one comment that I get a lot is, well, isn't that too much diversification? Well, we look at it from a risk management standpoint.
Yeah.
Sure, there might be a company out there that has double-digit returns in any given 1 year. We'll own that company, but it won't really affect the portfolio return on the upside. We look at, like I said, the risk minimization. Any company that is to go insolvent or go bankrupt or perform very poorly is going to have a minimal effect on the portfolio return because we hold such a small amount.
Yeah, and to your point, right, when we're going through these times of market volatility, if you're holding one or two different companies, those companies can go bankrupt. Those companies can struggle. We saw it firsthand with the banks, primarily in the U.S., like Silicon Valley Bank. You're investing in Silicon Valley Bank, your portfolio can go to zero, right? They struggle. When you invest in 12,000 different companies all over the world, that risk is pretty much gone, right? We pretty well have owning the entire world, right, and following the global economy. That's the most important thing that we can control in how we structure the portfolio.
Great. Second thing we can control, spending and savings.
Yeah.
We have the ability to determine where our money goes and how much we're putting away. So in times where, inflation is creeping up, we can't necessarily minimize our core expenses, but all of the other types of variable expenses, vacations,
Yeah.
New vehicles, maybe renovations to your home. Does it have to be done in a period where prices have gone up incredibly high? Or can it wait until prices come down, or perhaps you get that merit increase through your employer or income goes up?
That's exactly it. And even, like you said, those bigger ticket items, especially in a time like last year, interest rates went up.
Yeah.
So if you're going to be renovating your home, not a lot of people have that money just sitting around to put towards a renovation. Is now the time to take out a home equity line of credit, right, when you're paying 6-7% on a loan, right? So these things are well within your control. It's not saying you'll never do that home renovation. We know markets are cyclical. Bad times won't be bad times forever, and things will turn around. Whether that's a year, 2 years, whatever down the road, you can still have that home renovation done. It's kind of just putting things on hold and controlling what you can control.
Right.
A third one that is also prevalent is fees and expenses. And this kind of goes hand in hand with the portfolio as a whole, right? We can have a portfolio that is diversified with 12,000 different holdings, but if it's going to be incredibly expensive for you to hold that fund and that's eating into your returns over a long period of time, is that the right portfolio for you? And the same could be said back and forth if you're owning individual stocks and you have to pay a commission on a buy and sell in every transaction that you make. Is that the right fit for you? Fees and expenses are within your control in being able to invest in a product that is on the low fee side. The less fees that you pay means the more return you're going to get. And that's something that we prioritize with our clients in putting you in a low fee option that's still providing the diversification and the returns that we want to see.
Yeah, that's really important to point out. Minimizing fees means more money in your pocket, in your portfolio versus the investment management firm. So that's our video for today. So let us know in the comments, what are some things that you've been doing to try to minimize your spending or try to manage the portfolio in a different way, or ways that you're trying to minimize your expenses? We'd really love to hear the feedback. Again, please do subscribe to our YouTube channel, give us some comments, or provide us with a like. Until next time, I'm Carlo Cansino.
I'm Iaconetti.
And this has been Ask TMFG.